Invariably, at least once a week, I get this question about which time frame would be the most profitable time frame to trade. If you could trade any time frame, what would it be to make the most money? Most of us aren't in this just to trade for fun. We're in this to make a few dollars. And ideally, you want to be trading the time frame that is going to give you the biggest returns. Now, those time frames can range anywhere from the 1 minute to the daily time frame. Now, there is an easy and quick answer to this, and that essentially is the smaller time frame you go, potentially the more money you can make. The higher the time frame you go, you're generally not going to make as much money. Now, I can already hear the arguments about how the daily time frame moves better and how the smaller time frames are a little bit choppier, and all of this does come into consideration. But at the end of the day, what we're doing is trading percentages. So what we've got right here is a daily chart. Now, if we were looking at a long inversion trade in this area, and with that inversion, we'd be getting into a trade somewhere around here. Our stop loss would be down here. Now, if I were to hold on to this trade and trade it properly, I'd end up getting stopped out probably right in this area here. So let's take a look at that. What are we potentially making on this trade? Now, this trade goes for 200 and let's say 20 pips. It goes for 220 pips. That is a nice payday, and making 220 pips does sound very impressive. That is a lot of pips. Now, the stop loss on this trade is around 80 pips, so we're making almost 3 to 1 on this trade. Now, this is the daily time frame, and what we have is a trade that lasts for 12 days. This trade will last a little longer than 2 trading weeks, so we'd enter one trade and we'd be out of that one trade 2 weeks later. Now, with this, I think you can already see where we're getting at. With the bigger time frames, like the 4-hour or the daily time frames, you're still going to get these really nice setups, but it might take 4, 5, 6, 7, 8, 9, 10 days for a trade to actually materialize for you to take. And then once you're in that trade, it's going to take another week or 2 weeks or 3 weeks for that trade to finally close. And we've got another really nice trade in here. We'd have an entry just above here. If we're going for a fib stop, would be right in this area here. And we'd either hit our target or we'd get stopped out in this region right here. And if we're looking at the numbers on this one, again, we're looking at close to 100 pip stop, and we've got about 130 pip profit on this trade. So it's a little better than 1 to 1. It's 1.3 to 1. But again, if we're looking at this as a number of days, this trade would have taken us 10 days. 2 trading weeks in order to close this trade after it was placed. Now, in order for that trade to have set up, we may have needed to wait another 10 days, another 2 weeks. Now, with this, we'd be waiting a month for these 2 trades to have played out. And although the pip count on these trades, 220 pips, 130 pips, they sound really impressive, what it comes down to is the risk amount. Am I risking 2% per trade to make maybe 4 or 5% on a trade? Am I risking 2% on this trade to make maybe 3% on this trade? So in a month, I've made maybe 5 or 6%. Now, when you take these numbers and you drop it down to a smaller time frame, let's drop all the way down to the 15-minute time frame. We're looking at the 15-minute time frame. We are generally going to be presented on one currency pair. We can usually get about 1 good trade a day. With the 15-minute, it takes an hour to create 4 candles. If you are able to sit in front of your charts for your trading session, you may find 1 good trade. But because it is a 15-minute, that may not be the case. You may not get a trade every day. You're going to get a trade maybe 3 or 4 times a week. If we drop this down to the 5-minute time frame, there is a very good chance that you're going to get a trade every single day. And if you are looking at taking a trade every single day, the risk amount versus the win amount is still going to have the same kind of proportions. We're going to take a short trade in here. We're going to have our stop loss in here. This trade goes as far as 2 to 1. So we could risk 2% to make 4%. And we could do that in about an hour, maybe 2 hours. Of course, if you're trading the 5-minute time frame, the trade isn't going to set up immediately when you sit down. You may have to wait for 1 or 2 or 3 hours before that trade presents itself. But over the course of 3 or 4 hours, you may find a successful trade. And you can do this just about every single day. You're going to find a successful trade almost every day. Now, again, I do know that not every trade is going to be successful, but you're going to have a similar win rate with the daily as you do with these smaller time frames. Now, there are elements that you really do want to pay attention to. Even though this 5 minute is doing really good for me and I can trade the 5 minute and find a nice trade every day, that might not be something that you can do. If you are working a full-time job, sitting down in front of the chart for 3 or 4 hours straight is probably not an option. You just can't do that. So that's going to take the 5 minute, the 15 minute, the 1 hour, maybe even the 4 hour off the table. You'll have a few minutes, maybe once a day, where you can look at the daily time frame and then be looking for a trade this way. Now, in Ultra Blue, we've got something called the Lazy Trader that will help you trade the daily time frame without having to be there when the candle opens or closes. So you can come to your charts when you have that time, maybe once a day for 10 minutes, go through your pairs, place the order, and then go on about your day. And if this is the only way that you can do this, if you can only spend 10 minutes a day looking at your charts, the fastest way that you're going to grow an account is with something like the daily time frame. Now, before I became a full-time trader, I was printing t-shirts. I had a full-time job. I was working 16 hours a day. It was a small business that I had, and I was fortunate enough to be able to trade the 4-hour time frame because I could come back to my charts every 4 hours and take a look and see if there was a trade. Now, doing this gave me a lot of trading opportunities. I got a trade just about every day when you spread it out over the different currency pairs. The 4 hour is still a really big time frame, but I had the luxury to be able to take 10 minutes every 4 hours, take a look at the charts, and then do what I needed to do. That again might not be an option that you have. If you do have time where you can sit down in front of your charts, you're going to find that the 5 minute and the 15 minute are probably going to be your best bets for making the most money, simply because you're going to find trades just about every day. And over the course of a month, you may have 15 winning trades, where if you're looking at the daily time frame, over the course of the same month, you might get 1 or 2 or 3 winning trades. The percentages are still going to be the same. You're going to get into a trade, you're going to risk 2% or whatever that amount is, and you're going to bag your 2-to-1 or your 3-to-1 winner. And if you're doing this on a 5-minute time frame, you're going to have 1 a day. And if you're doing this on a daily time frame, you're going to have 1 every week, maybe 1 every 2 weeks. So although the variables are very important, can you spend 3 or 4 hours a day trading the 5 minute? Most people that are trading these days can't do that because they simply don't have that option. They get home, they have a family to attend to. Maybe the only time they have to trade is during the off session. They're looking at a market while they're sitting at their charts and the market goes sideways. And it happens day after day because they're either trading the very end of the New York session or the early hours of the Asian session and nothing is moving. So if you've got 3 hours and they're in the off session, you're simply not going to find a trade. This is not going to work for you. You can't be trading over and over in the worst time of day and expect something to come of that. Now, if we break this down to a numbers thing, the 1 minute would be the time frame that can make you the most money if you could catch all those profitable trades. The reason I'm not talking too much about that, the 1 minute is extremely choppy. The 1 minute can take you out of trades just as easy as it can get you into trades. The 1 minute has candles that are so small that the spreads are going to be hugely inconvenient for you. You're looking at 5 pip targets and you've got a 3 pip spread. This is not the ideal way to be trading. Some people love to trade the 1 minute, but for most people, this is not ideal. So when it comes down to the best time frames to trade, you're going to find the most profitable time frames will be the 5 minute and the 15 minute. You're going to see that these time frames are going to give you the most amount of trades with the least amount of chop, the least amount of noise. And when you are looking at noise, the 5 minute can get pretty noisy. The 15 minute can be pretty clean. But if your time is limited, you're going to end up maybe not choosing the 15 minute. You'll use that as the trend direction or the overall bias, and you'll end up trading the 5 minute. Now, this is what I do. I use the 15 minute to give me a bias direction, and then I will trade the 5 minute to give me those entries. So I get that winner, and then I go on about my life and I do all the other things that I have to do. And the best way that I can do that is on that 5 minute time frame. The 5 minute might have a personality that just doesn't fit yours. If you're a little more laid back and you need a little bit more time for the trades to develop and so on, the 15 minute might be a little bit more your style. The 1 hour, this is good for a lot of people as well. And the higher time frame you go, the market doesn't necessarily get smoother. You just have more time to evaluate the market. When you're looking at the 5-minute time frame, things happen very quickly, especially if you're looking at a few charts at the same time. You're looking at 4 or 5 different currency pairs. Stuff happens fast. And I can't tell you how many times I've missed a trade that I was looking to take simply because I was flipping back and forth between the different currency pairs, only to find a really nice setup and then miss that trade simply because I wasn't present. By the time I came back, it was already gone. It had left without me. So these are different things that you want to consider when you are looking at the time frame that is going to be the best suited for you. If you have the time and you can trade during late Asia, London, a little bit of New York, the 5-minute is probably going to be your best friend. When you use that 15-minute as a bias or a trend direction, you're going to find that you will be able to take a trade almost every day. And that beats hands down looking at the daily time frame, taking a trade once a week or once every 2 weeks. Now, there is nothing wrong with the daily time frame if that's the time frame that you need to trade. But if I'm answering that question, what is the best time frame to trade that can make you the most money? It will generally come down to that 5-minute or that 15-minute time frame.